Hi there, traders. This is Brad Gilbert with the weekly kickoff. It's Tuesday, the 2nd of April. All right, now, hope you had a good Easter break. It's time to rip into the markets. Now, just having a look at the markets yesterday, Monday, we had some US ISM manufacturing numbers, slightly better than expected. And we did see the markets sort of go into a sort of strong dollar sort of move, and it's all about connecting the dots, right? So this is any strong US numbers at the moment are going to lead towards a stronger dollar, okay, and vice versa, right? This is going to give us really active markets. Now, the dollar, as I said, just moved a little bit higher yesterday, so a little bit of a flush out on euro. This is like the Easter flush out, right? We've had, Good Friday, the whole Easter weekend. Now the markets are kicking back into gear, and they have flushed out or gone long dollars a little bit to start the week. Now, you're seeing a very clear uniform direction here on euro, sterling, Aussie, Kiwi, right? That's going to build confidence that the market is reacting nicely to the US numbers, and that's going to create a lot of opportunities this week. The start of a fresh month, fresh numbers. You're going to have US non-farm payrolls Friday, and that could set the tone for the dollar leading into the US CPI numbers afterwards. So now, but just looking at the dollar, right, it's not exactly setting the house on fire. Like dollar CAD sort of kicked back into gear, but dollar Swiss, like the two safe havens, dollar Swiss and dollar yen, pretty much sort of moving a little bit higher, but sort of not going too far, right? So that's something to just keep an eye on as we go through the start of the week. Now, let's just have a look where the action's going to come from. So if I just move the calendar over here. So this is what I was talking about, right? The ISM manufacturing numbers, okay? 50.3 versus 48.4 on the consensus. That's where the strong dollar move has come from. So what does that tell me? It tells me the market is reacting very nicely to the US numbers, second tier, top tier numbers in particular. So with that in mind, you can confidently go through the calendar and work out where the key events are because the markets are reacting quite nicely. That also probably means don't get bunkered down into like a medium to long-term position. These things are sort of kicking into gear. 8 to 10 hours, the move is over. So coming into Tuesday, we've got a bunch of, a good cross-section of numbers across all markets, German inflation numbers, factory orders, the JOLTS job openings. I mean, that was never really a number or a big number. So just be aware what's coming out. Inflation numbers out of the Eurozone. It has come into play in the past. It's been a while, but we want to see how that goes. The ISM services PMI, okay, on the back of the manufacturing numbers, this will be a very interesting number Thursday, all right, to see what happens there, see if it lines up with the manufacturing numbers. We've got Powell speaking, the Fed chairman, and then you come into Thursday, there's a few bits and pieces. There are quite a few Fed officials speaking through the week, so just bear that in mind too, because these lunatics can sort of try and come out and get some credibility by saying something stupid. Now, I don't think it's going to be the major focus for the week, but it will be a prime topic, the non-farm payrolls, right? Because the market, with those ISM manufacturing numbers we had yesterday, the market is looking at the US numbers very closely. Are they strong or weak? But what we are seeing across the globe are stronger employment numbers, but it's actually hiding what's happening in the global economics, in my opinion, right? Looks like everyone's going to work to try and pay their bills to survive, right? So strong employment numbers, yeah, it means things are going well, but not in the underbelly. The underbelly of these economies, they are starting to stall dramatically. The US may be surviving a little bit better than everywhere else, but it is going to be a talking point as we go through the week. So your job this week is to sort of piece it together, look for the opportunities as they come up, right? You're coming into sort of Tuesday's trading. There's a few bits and pieces to hang your hat on, but just follow the markets, right? Tune your charts up. This is the time not to sort of overthink things. And right, dollar yen is a key talking point across the board. What you'll see is you've got some trend lines here, right? So let's just call this number 1, number 2, number 3. They've got support trend lines. Now you can see dollar yen trading sideways. The market is very amped up about the BOJ intervening. I think it's not an event unless the US dollar starts to roll over. Otherwise, they're intervening in a strong dollar market and the whatever they do intervention wise will just rebound straight away. But what you're going to see is, okay, the market sort of start to drift sideways. You see a little bit of a blimp down through the trend line as the market sort of amps up for some move, and then it drifts sideways again. So I think what you're going to see on dollar yen, until we do see dollar weakness, you're going to see these little short-term moves as they break these short-term trend lines, right? I would expect another one here as well, and then drift sideways again. So just be aware. I know the media is hyping up about this, but it's not exactly happening just at the moment, right? I see better opportunities, right, on the major pairs here: Euro, Sterling, Aussie, Kiwi. We've got trend lines, okay? All we need here is good US numbers to kick into gear. We get weak US numbers. We've got 1, 2, 3, 4 good trading opportunities with good technical levels. That gives us good entry levels, and the data will give us the direction. If we start to see, you need the big numbers, the big US numbers, to really get the dollar running topside, okay? It's not going to do it maybe after the non-farm payrolls, but really it's the CPI numbers that are going to be the key. In amongst that, right now, we've got short-term trading opportunities across the board, and that's what you need to be focusing on, okay? So don't get too caught up in this is the next big move, and I wouldn't be looking for 5 or 10 points. I mean, there's 40 or 50 points in these markets, but you just have to get the timing right. Now, just looking at the overall theme of what's happening at the start of the week here, and I'm calling Tuesday the start, okay? Not exactly uniform conditions here on the equity markets. You can see the currencies, the dollar, US dollar is going up against most things, but you know what? It's the start of the Asian session, so you're not going to really see uniformity at this stage. What we are seeing is the US Treasury prices down, means the yields are up, right? Gives the dollar an upward bias. And that's what we're seeing, obviously, on following those US ISM manufacturing numbers. So just keep an eye on your calendar as we go through the week. Make sure you have a look around what is driving the markets, right? So this is, when you see this on a Monday, this is a great indicator that is showing us how the market is reacting to the technical data. I mean, the macro data. So, you know what? The next US numbers, stronger or weaker, we should see a more, just a more of a fluid move straight afterwards, because the market is reacting very nicely to the data at this point. All right, so lots to play for. Non-farm payrolls Friday. We'll get into that as we go through the week, but there are sort of bits and pieces as we go along. Just get your charts set up so you know the key levels, and then you can put the direction and momentum over the top. All right, guys, have a good week. All the best. Cheerio.